Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 133 for July 28th, 2020. My name is David Cosmeter. I'm the creator of TimingResearch.com, and today we will be discussing your trade ideas. So we are recording this live at 4 p.m. Eastern Time, and today I have arranged for Sid Norris to join us for the first time. So he is sharing his screen, and you'll be able to see his charts and how he looks at the markets today. And I have the option professor of optionprofessor.com back to moderate today, and I'm going to go ahead and turn it over to him.
Okay, thanks a lot, David, and welcome, Sid. I would like you, if you could, introduce yourself to the audience and a little background on Elliott Wave Plus before we get started, so they're acquainted with you.
Sure, Jim, thanks. My name is Sid Norris, and I've had this website, Elliott Wave Plus, and a few permutations of it going back about 10 years. And I'm an old guy. I've been working in the markets mainly as a private investor and trader since the 80s, and have a computer background from the early 80s. And first started getting interested in charting and indicators way back then, so when it was real hard to find anything that would even run graphics on a PC. So there's at my website, elliottwaveplus.com, if you scroll down, it tells a little bit about myself. I primarily work with Elliott Wave theory as well as cycle analysis, both Hurst cycle analysis and some other forms of technical analysis. And then I work a lot of additional things into my analysis, including algorithmic trade signals based on momentum and sentiment, as well as intermarket correlations, divergences, Fibonacci price targets, and others. Really a relatively endless line of tools from a technical analysis standpoint. So that's a quick introduction.
Sure. And at the end of the day, you're just trying to increase your probabilities based on the indicators that you're looking at.
Yeah, for the most part, I would say I give big picture ideas for the most part, but and I always recommend and to my subscribers, if at all possible, try to build some kind of system on your own trading platform, and I'll show that quite a bit today, where you have an indicator that you or two that you are keying off of in order to confirm price direction changes and other things that I talk about in every week in my webinars and twice per week in all of my screenshots, and try to have some kind of tool like the DMX. This is the DMI indicator, where I've taken, to a lot of people, the DMI indicator looks like a bunch of squiggly lines at the bottom of the screen, but I've taken several different aspects of the actual information that it provides to show folks today how it can give signals based on strictly on price action. So it's based on trade or selling pressure versus buying pressure, and it also can indicate times where the market is going to move sideways, where you're better off just waiting till the trend resumes. So it's a trend following system, and I really like this one for my subscribers when I'm calling for a major turn, for instance, in something. You want to make sure that you aren't just simply just jumping in there and doing it. You want to see some kind of confirmation on your own system and on your own screens that we do have a trend change, for instance, before trading it.
So many people will use your research as an additional tool to come up with a good conclusion.
Absolutely. Many of my subscribers are institutional. They really are big picture folks. And for instance, when they get my screenshots and work, I'll use cycle analysis
Mm-hmm.
that projects that we're going to move down using two different cyclic models between late July and early October in the markets. And so I worked that into an Elliott wave framework and set up Fibonacci price targets so that they all match up. Now that doesn't mean that it's immediately time to just go short with, and buy a bunch of puts.
Right.
I always try to get my subscribers and my most successful trading subscribers will use their own charts on multiple time frames in order to time those entries.
Right. But the warning right now is there could be some clouds on the horizon in the next 4 to 8 weeks.
No question.
Yeah. And then you take that forecast, weather forecast, and obviously you start preparing appropriately with foul weather gear.
Yeah, this market this year, to be honest, has been somewhat of a freak show.
Mm-hmm.
The plunge, I was bearish going into that plunge, but I started getting bearish several weeks ahead of it,
Mm-hmm.
and it kept grinding a little bit higher. And then when it broke, remember when it gave that gap right there,
Mm-hmm.
most gaps like that will fill before it continues down, and it just didn't even try to fill it.
Yeah.
It just kept rolling, and the 38% decline in a matter of 5 weeks, the fastest ever from an all-time high. And ever since then, considering all of the bad news in the markets, it's just been miraculous that the market has recovered as much as it has.
Yeah.
And so I think we're at a particularly dangerous, frankly, juncture right now in the markets.
Yeah, and the setup on the RSI is not dissimilar to it was when we were at 3,400 in February.
Very similar.
Yeah.
Overbought here, in the S&P has made a slight new high here in July above the early June highs. The Dow has not. But so that is a clear RSI divergence on daily chart. And if you go back and you look at what's happening on the even the monthly charts, there was a fantastically huge divergence going into that high in February. That's particularly troubling.
I was watching on Bloomberg. They had a relationship between volatility. I don't know if it was VXN or VNX and the NDX, meaning the NASDAQ and its volatility. And the gap was really at a historic level. And they said for this relationship of volatility and the price to correct itself, generally volatility picks up and the NASDAQ comes down to close the gap. Do you see the volatility versus price as a fairly wide chasm now?
Yeah, it's been amazing to watch the VIX continue to push lower here, and it's even moved slightly below its 200-day moving average. This is the daily chart. I also take a cycle analysis, and I put that on the chart on what it is expected next based on, and this is a cycle program at the Foundation of Study of Cycles. Anybody wants to join there, it's $100 for a year, and you get access to this cycle tool that I think is easily worth the money, where you can do your own cycle analysis and to try to get an idea of what the shorter, intermediate, and longer term cycles, how they're affecting price and likely to affect it moving forward. But you can see right now, the VIX was hugging the bottom of this channel, this Bollinger Band channel, and now it's acting a little jumpy up out of there. And my cycle analysis says we're probably going to move up into at least early August next with the VIX.
Okay. Well, let's start taking a bite out of this list so the listeners can get their stocks, addressed. The first one is a stock that obviously has gone through the roof, NVIDIA. NVDA, and it peaked out at 431. It's currently at about 408, and
Yeah, for that one, it's not one of the normal ones. About the top 8 volume stocks, I do Elliott wave counts on them, including Apple and Google and Netflix and many of the highest volume stocks. That happens to be one that I don't work with as far as an Elliott wave count, but let's put it in to perspective using the DMI indicator and chart template that I've got. So I'm going to change the ticker to NVDA. I did take a quick look at these going in, and this is a daily chart. So what the DMI indicator does, and I've got a misspelling, I'm going to change that real quick, is the green line down here is buying pressure, the red line is selling pressure, and when those two cross over, it creates a signal. And so these triangles are signals. If the ADX, which is the smooth difference between those two lines, that's this heavier line here. If that is below 25, then there's considered, this indicator is suggesting there's no trend. So at least currently right now, NVIDIA has been moving sideways. It put its high in on July 13, and it's been unable to move higher than that, and it's chopping sideways. So the indicator is drawing a gray box, which means that there's no real trend right now. However, the last signal that we have on a daily chart is a sell signal on July 23rd. That was Thursday of last week. And then, so it's been unable to make a new high. It's been chopping sideways. The question is, and the markets do this all the time, they'll consolidate and they'll either break out either to the upside or the downside. So which is the more likely breakout direction? And based on a 240-minute chart, it just took the same template and applied it to a 240-minute chart. The last signal we have is a sell here on Thursday of last week, and then we have a trend continuation signal here that actually suggests that right now that the breakout direction will be to the downside. If this black line down here, which is the ADX line, will break above this little green dotted line, that is the 25 line, then this will turn into a trend, from a trendless to a trending scenario. So I think the most likely direction is that it'll break to the downside.
okay. And clearly taking out that 390 area would maybe even cause some acceleration, huh?
Definitely, because from an Elliott wave standpoint, this looks like a pretty ominous 1, 2, 1, 2 right now. So this would be ready for a wave 3 to the downside. So we'll see if it actually can do that, but that would be in keeping also with my cycle analysis on the NASDAQ.
And the moving averages are way underneath, so there is a lot of real estate if it did start breaking, you know.
Yeah, there's this consolidation back here. Let's see, I'm putting it back on a daily chart. And, you know, this has definitely been a strong move. It's hard to even see any waves inside of there, but this could easily be, you know, 1, 2, maybe a 3, end of a wave 3 here and a 4 here. So typically after a 5 wave up structure, you'll move back to the wave 4 of 1 lesser degree. So if it does break to the downside, I would put a target of 320 on it.
Okay, let's go to the next one, which is another hot one as far as volatile and in the news all the time. That's Tesla.
The poster child for nobody cares about valuation anymore.
And today they took $63 out of the stock.
Well, as you can see, I'm bearish on this one too. I just think that this has been the poster child for the kind of the freak show year that we've had here this year. And, it's not like the stock can't go down. Back over here, it moved down 63% in a matter of just a few weeks. And this move to the upside looks like a 1, 2, 3, 4, and an extended fifth wave. So extended fifth waves often mark some important tops. I'm bearish, and I think it works lower, and it could work significantly lower. So I've drawn, if this is a 1 and a 2, I've drawn some Fibonacci targets. If wave 3 to the downside was 1.618 times the length of wave 1, it'd go down to 1170, but I doubt that that's all that it does. I think we're going to go back below 1,000 next.
Yeah, their car sales are down year over year, but they make a ton of money on these regulatory credits. But I don't know if that's a long-lasting thing or not.
It certainly is. The price of the stock, in a normal valuation environment, what do you think this stock would be selling for?
Yeah, a lot less.
$100.
Yeah. Well, anyway, it's a story stock, and certainly the people who've written it up have made out pretty good, but we could be time for a little seatbelt time like we were earlier.
Yeah.
Let's go over to another of the FANG stocks. This one is Netflix. This one did have the blow-off high point at 575, and then they announced their earnings, and people sobered up a little bit, trading 488 about now.
Yeah, now on this one, you'll notice that on Tesla, there was no daily sell signal yet on the DMI system, but we have one on Netflix. And that came in on Thursday of last week. And the recovery, these larger triangles mean that the signal is a stronger signal because the ADX line is above 25. So the bigger triangles up here are more powerful signals, just like this was a more powerful buy signal here. So we have a high-powered sell signal and very little recovery over the last couple of days. It's just kind of moving sideways. I suspect there's more downside here on this one as well.
And again, it's part of that NASDAQ versus the NASDAQ volatility where the record spread is there. So the concept would be volatility picks up and the NASDAQ prices come back down to fill that gap up a little bit.
Well, I don't want to scare anybody, but I'll show you my wave count on the NASDAQ long term real quick before we move to the next one, because this is going to, a lot of these stocks are on this list that we're working through today are in the NASDAQ.
Right.
But on this weekly chart of the NASDAQ, so this is the late 2008 low. We just tagged a really important Fibonacci target for the end of a fifth wave up from that low over 10 years ago. And that's where wave 5 would be 0.618 times the net travel to 1 through 3. So there's 1, 2, 3 in 2015, 4 in 2016, and then this 5. So that is one of the most reliable Fibonacci targets we have in Elliott wave, and it was just tagged, and we've seen some price rejection from that high. So this is troubling. There's no question. It's troubling, and a lot of people would say, well, if the NASDAQ's going to move down, the people are just going to rotate into something else. And it seems like that rotation, at least in the short term, seems to be into precious metals, but we'll see. We'll see how that turns out. But this is not a bullish outlook. And so in the cycles on the NASDAQ, the Dow, the S&P are all suggesting downward movement down into October, November timeframe next. That's all of the cycles work that I do is projecting that. So it's not exactly a rosy picture.
Yeah, it looks like 10,000 if it got taken out would maybe cause some acceleration again too, huh?
Yeah, 9750 was this last peak here. So yeah, that would be, I guess, the next test point
Mm-hmm.
for me. And there's a I don't know if you look at the chat, but it says, what is the volatility stop setting? So I'll just quickly say on this um, chart template that I worked out, that's that blue line. That's suggesting where the stop would be. So you can see on Netflix that on this date right here, the July 17th, it dropped below that line. So all of a sudden it's thinking more short, and it's suggesting putting the stop above current price. So this is definitely changed to a bearish outlook on the daily chart on Netflix.
Is there any, you were saying you had something with algo analysis or something? Can you
Yeah,
apply any of that to this and see what that might be telling you at all?
well, I could certainly apply it to the NASDAQ and the Russell and the S&P and Dow, and those are all covered in my premium plan, which has algos signals. So let's take a quick look at the NASDAQ. Okay, so this is every nightly. Our premium plan subscribers get a screenshot of signals that occur on a daily chart. And it also indicates current retail sentiment and also particular divergences and things. And the last signal we had on the NASDAQ was a sell signal on July 24. Now that was stopped out on July 27, on Monday. But here we have some possible downside continuation. And I might show you more popular trading item really for most of my subscribers is the ES contract on the S&P.
E-mini, yeah.
And I'll switch to that real quick. But the sentiment has been extremely elevated. The retail sentiment recently, which is another troubling aspect of these markets right now.
The Robin Hoods, et cetera.
I guess, it's just, usually retail is they chase.
Mm-hmm.
And on this, so this algo shows signals, that's these triangles. And then it shows exit signals, that's the green squares. And the big green boxes are winning trades. The dark red boxes back behind are losing trades. And so you'll notice that what this algo is designed to do is to catch breakouts and stick with the trade for a while. And that's how it wins. It hits home runs. It's not designed to just chip away with little um, trades. If it finds a trending move, it has the ability to stick with the trade, and the reason is because it's based on a combination of the adaptive moving average as well as what I call the Walter Bressert indicator, which is basically a triple smoothed RSI. So the big green boxes are the winners. The little red ones are the losers. The reason they're always small is because of protective stops. And lately, the market has been just chopping its way up to the upside, not strong at all here in July. And yet the retail was so bullish. 91% of retail traders are bullish here, 89% of retail traders bullish here. And it did eke out a little winner here recently, but it saw a loss of momentum on July 23rd, and it's currently flat. Any kind of break below this adaptive moving average right here, and we'll probably get a sell signal.
And what's a ballpark number on that?
This is always shown on it's 3188.25. And I always show the settings of the AMA system as well as the settings of my I call it the Walter Bressert. It's a RSI 3M3. It's an old indicator that that he put together many decades ago.
Yeah.
But and then there's a moving average of that. So what the algo does is it waits for confirmation from both of those, the AMA, the slope of the AMA, and the Walter Bressert. It gets long, but it will exit at the first sign of trouble, and that usually comes from the Walter Bressert and crossing over from its moving average, and that's what that block is right there.
Mm-hmm. Yeah, and you can see that 3,200 area was the pullback low. So if you blow out the pullback low and then you blow out 3188, again, the acceleration potential will be rising.
Yeah, I'd say a daily close below 3188, and we'll have a sell signal on this momentum algo.
Yeah. And there's got to be a couple of people in there who want to grab some profits at some point.
Absolutely.
Yeah. Okay. Well, let's see. The next one up here is going to be on Twitter.
Okay.
And that's
let me jump back over
TWTR.
to here.
Social media.
TWTR. And there was a question on the chat. What's the software? So I use Genesis Trade Navigator platform, and then it allows programming of algos in it. And so all that screen that I just showed you before of my momentum algo that I show every night on about 20 different futures contracts, currencies, and ETFs, including leveraged ETFs, is something that I wrote inside the software. So here's Twitter. The interesting thing about Twitter on this daily chart is that it made a high back here in February, and it barely eked out a slight new intraday high just 2 or 3 days ago. And then it gave that up. Well, it looks like it's giving that up. So from an Elliott wave standpoint, this looks like a B wave to me to the upside, where just slightly it's like a false breakout. And had a real typical target for a B wave up here at 40.94. Didn't quite hit it, got to 40.25. I think it's going to move back below this low here on the June 29 low of 28.23 next. So this would be wave A of an expanded flat, a slight new high for wave B. See, this moved down in 3 waves. This is up in 3 waves. And now it has come back down and overlapped this high. So I think this is going to give a 5-wave down structure down to below 28.23 next.
Well, this next one is pretty exciting because both it and Taiwan Semi went through the roof, based in part on Intel having to delay one of their chips for 6 months or a year. So everyone plowed into this one, and Taiwan Semi, AMD, Advanced Micro Devices.
Yes.
But
AMD, already got it up here. And this is also an interesting one because this move down from February looks like a 3-wave structure to the downside. And then this move to the upside looks like a 3-wave structure. Possibly a triangle type structure across here, and then B, and then a C wave. And now AMD has moved up to where it's 1.382 times the length of wave A. That is the most common target for the end of a B wave. Now, this is good news for AMD long term because this would not be a major top. It'd just be a B wave, and then we would likely move down to, hate to say it, but possibly below the March low before getting a strong 5th wave up. So it's possible that what it's doing is an A, B, C, and then on to more all-time highs after that. But the fact that it saw price rejection at that wave B, real typical wave B target, indicates to me that I wouldn't be chasing here. The last signal we have on a daily chart is a trend resumption buy, and it's in profit, but I'd be very wary of chasing.
Okay. Yeah, I think their earnings came out pretty good, and it's popping a little bit in the aftermarket, but the aftermarket is not when the markets are open. So we'll have to see how the next couple of days works out for AMD.
Yeah, it's
again, they have a little
bit
one
of the strongest moves.
Yeah, they have a little bit of a special situation because of that Intel deal. You know what I mean?
Yeah, now the other possibility is this is wave 1 and this is a sideways wave 2, and now we're getting a wave 3. So if we get a daily close above 71.14, it could be in wave 3 up and keep going.
Yeah.
It's at a critical juncture right now.
And like I say, them and Taiwan Semi made these, inordinate jumps off of that Intel news, because I guess that it means a lot more revenue to those two companies, So
yeah, I don't, to be honest.
Yeah. No, I mean,
I think it's strictly technical outlook on these things, and a correlation outlook. And I'm not bullish the Nasdaq right now. So if it was able to continue higher, maybe it'll be one of the few winners. Could be.
Yeah, only because of the special situation. Okay, how about QQQ, which is obviously a proxy for the Nasdaq?
Sure. I already showed you on the Nasdaq how it hit what I believe is a major target up here, and on a daily chart, did sell signal on the DMI on 7/24, and the very next day got a buy signal. So in order to really, and here's a really interesting thing about the Nasdaq though. You look at this ATR volatility stop, and price was able to stay above it. One little aberration right here, but it returned to the trend, kept going up, and now it's back flirting with that ATR stop. And notice that the ATR stop had an upward slope to it, and now it's flattened out. So I would say once again we're at a critical juncture. So I'm going to go to 240-minute chart on it, and I would have to say that there's a sell signal. That's the last official large sell signal that came with a strong trending ADX, and then we got a couple of trend following signals. But this most recent sell signal right here, followed by a trend resumption signal right here, is bearish. So once again, I think it's pretty likely that this breaks to the downside, not to the upside, out of this consolidation.
All right, here's one that's held by about 9 million funds, Microsoft.
Microsoft. I had a chance to buy Microsoft as a penny stock when Bill Gates was writing DOS, and I was selling it at a computer store back in the early 80s. Wish I'd stuck with that deal.
I guess.
Same with Apple. So on Microsoft, I'm going to flip back to a daily. So we're getting this sideways consolidation, but the high that occurred on July 9 is still holding on Microsoft. So we've got on a daily chart some whipsaw action going on. So, but once again, we're flirting with the ATR, and right now, it's below it. The last 3 days, it's below the ATR, and that's bearish. And we moved into the 240-minute chart. There's a definite potential. This is a 1, 2, 3, 4, 5 wave down structure. That would be a 1 and a 2, and this would be a possible another 1 and 2. So right now on a 240-minute chart, we're on a sell signal from July 23rd, and price was able to make it back up to the ATR and got a little bit of rejection there. That looks bearish to me. Sorry to be a broken record, but
yeah, well, again, we've had a big run, and your thesis is that it's possible that we're going to obviously ease back in the next 4 to 8 weeks, and so these stocks are part of that, right?
Yes, really all the way to October.
We are now going to change it to Dust, and I think, isn't Dust a gold stock?
It's a 2 times bearish GDX. So let me show you GDX.
Which must have been a pretty bad loser lately.
Yeah. But it could turn. It could turn right here, does.
Mm-hmm.
And so here's a daily chart of GDX, which is later in the list. So really, dust is just an underlying derivative of GDX. And so up from that March low, 1, 2, 3, 4, 5. Typically, we have wave fives that move all the way up to where they're 0.618 times the net travel to 1 through 3, and that's quite a bit higher on GDX, but I don't think it's going to get there. And the reason is because I think we've seen some terminal fifth wave moves in silver and gold recently that I think have to retrace before they can make their next move up. So I'm calling this the end of 5 waves up in GDX, and that the next move, according to Elliott wave, would be back to the wave 4, a 1 lesser degree. So it's up there around 43.50 now. I think it'll move all the way back to 31.22, possibly deeper, because
the whole world's long.
after 5 waves up, this is going to bring about a critical, conversation that after a 5 wave up structure, the next move is back not only to probably back to the wave 4 of 1 lesser degree, but possibly retracing between 0.382 and 0.618 of the entire 5 wave up move. I think it's real important right here to take a peek at the US dollar index. And so I'm going to switch to that real quick. And the US dollar index has just been getting pummeled recently, but it looks to me like it's putting in a clear Elliott wave pattern. And that is a 1, 2, 3, 4, 5 wave structure down. Now, I'll be honest, I was fooled because that looks a lot like a triangle right there. And in Elliott wave, you can't have a triangle in a wave 2 position. So I wasn't expecting a 5th wave down here because I just figured it'd be an A, B, C, because you can't have a triangle in a wave 2 alone in a wave 2 position. You could have that as a wave B. So that fooled me. And I kind of made a joke on the screen. It said, looks like a triangle, smells like a triangle, must not have been a triangle. But anyway, now we're dealing, obviously, I think, with a 5th wave down, and a typical wave 5 target, and the most common, and it's one of the best targets we have at Elliott wave, is where it is 1.6 or 0.618 times the net travel to 1 through 3, and that target of 93.47 was struck here in the last couple of days. And so typically after a 5 wave structure to the downside, you'll get a rebound back to the wave 4 of 1 lesser degree. So I think the US dollar has probably, this is all about probabilities, has probably moved down about as far as it's going to go right now, and then would look for a move back to the wave 4 of 1 lesser degree. So if that happens, then I think the whole silver gold, screaming move is over for now. And we get that similar pullback in those back to the wave 4 of 1 lesser degree. So that's one of that Fibonacci target, and the fact that it's acting like it may be respecting it on US dollar index is suggesting to me that we're going to pull back from this screaming move we've seen in the precious metals. And that means also the precious metals stocks like GDX.
And SIL and things like that.
Yeah, I mean, it's, if I go to my GDX, like here's my gold roadmap, is that we're just finishing a large degree wave 3, and we're going to get a pullback for wave 4 next, and then it'll move to new highs, and it could move substantially on to new highs after that, because wave 5s are typically the most stretched in precious metals. And I think this was a wave 5, and that's the reason it's been so aggressive. It's been so aggressive that it's unsustainable in my opinion without some kind of pullback. We also have a kind of a bearish condition in the large specs versus the commercials. The large specs, which are trend followers, are hugely long at this point. The commercials are hedging for a pullback. The commercials are the producers. And then the move on silver has been even more parabolic. And look at the pullback on silver just today. That high on silver at 26.27 happened overnight, about midnight.
Yeah.
And in the futures, and it closed substantially lower today. This is a weekly chart. And so it pulled back from its intraday high today 7%.
Yeah.
So that is the way silver rolls. It did this same thing when it finally topped in 2011. When it did reverse, it was a substantial and quick reversal. So, but this does look like a 5-wave up structure with an extended 5th wave, and I would look for a pullback to the wave 4 of one lesser degree before upside.
And your time frame, excuse me, would be sometime in the November time frame for a cyclical low?
Yes. Using Hurst cycle analysis, there's a 40-week cycle trough due between mid-November and the end of the year.
Right.
Using the cycles program at the Foundation for the Study of Cycles, down through late October. And the amazing thing is how far ahead, not only how far ahead gold got from silver, but also how highly correlated, let's see if I can find that real quick, gold has been with the stock market. They've been moving up together. So a lot of people think that gold is like a safe haven play. But if that's true, why have they been moving up together since the March low?
Well, I think it's a money supply and a monetary base deal. The monetary base is exploding, which is helpful to stock, and it's obviously helpful to gold. Maybe that's it.
Could be. Yeah, but I know this. It doesn't appear to be because of a flight to safety.
No.
You know, here's the stock market in black. These are daily line chart of daily closes, and the March low is back here, and I've got them. I've got gold in the orange, stock market in black, and they've been moving together to the upside. The only thing that's really been getting smashed is the dollar, and the purple is the bonds. And like I say, I think I can count 5 waves down complete on the dollar. It's hit a Fibonacci target, probably going to get a reversal, and that reversal might take us all the way to October, November.
Another quick question is, in 2012, we had a situation where the break even on the 10-year versus the nominal 10-year yield inverted like it is now, meaning you actually lose money because you have a negative net rate. And then, of course, things changed in 2013 and 2014. Is the bond market giving you any idea that we are at an extreme extension here, and that bond yields may rise in the next 12 months, and we may see this Goldilocks low interest environment change a bit?
Well, I'll show you what the cycles analysis is suggesting, and that is that we may get one last move to the upside that lasts into late August, but looking for a pullback through the end of the year. But the thing that is the most obvious thing that I can see on a bonds chart right now is that the Fed is buying this.
Yeah.
And you know, they're loaning themselves money. They're printing money by buying these bonds and then loaning it to themselves. That's how they print. And it's that's any kind of dips here have just been almost non-existent. So no, I don't see quite yet that we would get a really strong move to the downside. This I call this a caterpillar pattern, where it moves into a really narrow sideways pattern, and I just think that it's being manipulated.
Yeah.
They're buying it and holding it up.
Yeah. So ordinarily it might be a situation where it's very extended, but because of the Fed's interaction there, it's obscuring the real value.
Yes.
Yeah. All right, let's go to the next one here, which is Costco.
Okay. Costco was interesting when I took a peek at it before we started. And it's more bullish. So I'm going to turn tail over to the bullish side on this one. Let me look at it here.
Yeah, it seems to be weatherproof.
COST. So from that March low, it got immediately back up to the February high. And then it consolidated in what I think is an Elliott wave triangle. And I think what we're getting now is a thrust out of that triangle. And I don't think it's finished. So I've got a target on Costco of 348. And I don't think it'll take it very long to get there. This looks like a 1 and a 2 and a 3 and just a sideways consolidation for wave 4. I think the breakout is going to move to the upside on Costco. But the bad news is once that final fifth wave thrust, that final fifth wave out of this low here will finish the thrust, the terminal thrust out of the triangle, and then it's going to look more bearish from there.
Okay, here's another one coming up with earnings this week, Facebook.
Okay. A quick look at Facebook. The last signal we have on a day chart using the DMI is right here. That's on Wednesday, July 22. And price has been moving down ever since then. And you can see that the ADX line is really close to hitting that green line there. That's the 25 threshold. And once it hits that and moves above it, then we're going to get one of these orange dots here, and that's going to say that's going to be suggesting trend continuation to the downside. So this looks bearish.
I got you. And Square, SQ.
Square, just I was amazed when I brought up the chart because I don't know what this really is. What does Square do? Anybody know?
Yeah, they do a lot of the payment centers and then a lot of their businesses with the smaller consumer, which people got very nervous about after the crash, and then with the PPP and the $600 extra a week, they became less concerned, and there you go.
Okay, so this looks like out of the March low, 1, 2, 3, 4, and I don't think the fifth wave is done yet. I wouldn't be surprised. Now the high is still holding from July 9, but I wouldn't be surprised if this is a small degree fourth wave and we have one more wave to the upside. It's, this is a sideways consolidation. The reason I say that is out of this low, this looks like a 1, 2, 3, 4. So it might have a little fifth wave to the upside. On the daily chart, though, the last strong signal we have is a sell.
Okay.
And the high is still holding from July 9, but I think this might have one more slight new high before it finishes 5 waves up from the March low, and then the biggest pullback seen in a little while.
You know, we did talk about the dollar index, and of course, the euro is like 60% of the dollar index. But I think one of the attendees wanted you to put up the euro just to take a look and see what that is.
Sure.
That's had a very huge run up towards the 118 area, I think.
Yes. Let me just change my wave count on that one too.
Yeah, a lot of people are extended into the metals now, and they're extended into the euro and things like that because they've had big runs. And I'm sure they're trying to figure out should they trim or do something to protect the gains they have.
My recommendation is that they take profit.
Mm, that's succinct.
and possibly reverse their position. This looks like a 5-wave structure up, complete, including an extended fifth wave that pushed a little past the most normal target, not much. Matter of fact, it closed back slightly below that today. So 1, 2, 1, 2, 3, 4, 3, triangle for 4. This was all a thrust out of a triangle. 1, 2, 3, 4, and then extended fifth wave. This is unsustainable. My best target was 1.17248, and it hit 11781. And this is typical these days. The market is absolutely, what's the word for it? It's manic right now. The fifth waves are pushing further. They're pushing through targets, one theory I have about that is the proliferation of trend following algos. But as you can see, 1 day later, it's daily chart. 1 day after it pushed through there, it came back and closed actually below today that target. So looking to the downside, guess what? Till November. But this is bullish. This is a 1, 2, and then 1, 2, and much higher. So I think that between now and essentially the election, we get a pullback on a lot of things, and then a resumption of the trend. This 5-wave obstruction from here, this is bullish. So this I'm labeling it as a wave 1, coming back for a wave 2 next. So I think there's going to be some major buying opportunities in lots of things in October, November timeframe.
And what do you think in the August and September? More like a choppy situation?
Well, I'm drawing this as a potential corrective ABC zigzag to the downside back to the 0.618 retrace of the entire move. There is a 20-week cycle trough nest that is due somewhere in August there. The Foundation for Study of Cycles is suggesting downward movement down through early September. So, so I've basically, that's what my roadmap is spelling out and then, this move, it doesn't have to go down as deep as a 0.618 retrace, but it likely will eventually work its way lower down to the level of the wave 4 at one lesser degree, and that's at 1.1219, basically 1.122. So that's my next target for the euro, is for a reversal. But this is a very bullish sign on the euro, and it's a bearish sign on the dollar. Her cycle analysis is definitely projecting that the dollar will essentially collapse into the middle of the year 2023, but it may attempt to kind of stay up for about 1 more year before it starts really collapsing.
Okay, we have a few minutes here at the top, before the top of the hour, and I thought if you had some specific markets that we haven't spoken about that you'd like to talk about, and then of course discuss any special offer you might have for the people that are listening so they could take advantage of getting this information, because I, for one, have been in this thing for decades, and I always see this kind of analysis as very, very valuable. So do you have any other markets we haven't hit, or is there something you'd like to offer?
Well, let's see. We looked at bonds, we looked at currencies, we looked at mining. You know, one real interesting thing, and I'll bring it over, is I use Sentient Trader software, and let's see if I can. Where'd it go? Here we go. So Sentient Trader software is how I figure Hurst cycle analysis. This is analysis of the S&P, and there's that move down into August, and then actually into November. There's that move that the composite line is suggesting down into a 40-week cycle trough in November. So all of my cycle analysis is computer generated. You know, and I also use this other cycles program from the Foundation for the Study of Cycles and this is also the S&P 500, and you can see it may kind of try to stay up, but I suspect from about now we'll get a little 1-2 before we get a move down into, see how it's late October of this year. So that is almost a universal expectation based on two different methods of cycle analysis, and that is what I always try to use computer generated cycle analysis, and that keeps me from trying to force my own, any kind of personal bias, no matter how much I try to squelch it. You know, I can't, you know, that many eliticians are accused of allowing their bias to enter into their wave counts, and I just do everything that I possibly can to keep that from happening. There is and Theo's asking for Tesla. I already showed that one in I know Shopify is super popular. And let me bring up a quick, I haven't even looked at this, but just for the fellow that's put this in the chat here, I'll show real quick Shopify. And to be honest, I haven't looked at this. I know it's been screaming to the upside. So once again, from the March low right here, you can see a really clear 1, 2, 3, 4, 5. And so I'm going to change this chart to okay, it is on Simulog. It's important when drawing Fibonacci targets to use a Simulog chart. So I'm going to look for wave 5 target that is 0.618 times the net traveled at 1 through 3. And as you can see, that's a bit higher. So typically I'd look for 1284 on Shopify for a fifth wave. And Shopify has had a tendency to kind of be more bullish than some other items. I'm a little concerned. So this might be a 1 and a 2 and a 3, probably a 4 here. I wouldn't be surprised if Shopify has one more push to 1284 before a significant pullback. Very quickly, I'll show you my offer. Oh, and before I show the offer, go back to my website really quick. How much time do we have?
As much as you'd like.
Oh, that's nice. Thank you.
Yeah, we can take a few extra minutes if you need it.
Okay. So when you go to my site, Elliott Wave Plus, the plus is all the additional cycles work and sentiment work that I add to everything. If you type on subscriptions, it'll describe the different subscription levels that I have. And there's 4 levels. Crypto plan is $25 a month. Screenshots, that's twice per week. Screenshots on many items. I put a lot of bonus items in there. On weekends, there's over 100 screenshots of different items where I've done combined Elliott Wave and Hurst analysis. The core items are listed here. Then I hold a weekly webinar. This is included in the premium plan, which is $100 a month. Each higher price plan includes everything in the lower price plans. And then the premium plan includes my algo reports that go out nightly with actual signals that offer confirmation of trend changes that I might call too early, for instance. It allows a person to wait for some sort of confirming actual signals, before looking for the turn that I've been calling for based on Elliott wave, Fibonacci, and Hurst cycle analysis. So that's $200 a month. All of those levels, if you go to there's usually a tab up here called subscribe. I don't see it here, but anyway, when you go to, there it is. It's yellow. If you go in here and subscribe to any one of those plans and use the coupon code TRS-August 2020, exactly like that, TRS-August 2020. So you go to the checkout, that'll give you half price on your first month of any level of service that is a monthly plan. I also have discounted annual plans, but the coupon codes does not work on those. It also will only work on first-time subscribers only, and you can cancel at any time. So you can allow the subscription to continue or not, your choice, anytime. And you can log in. Once you log in into my back office, it'll show you where you can easily cancel your subscription, or email me and tell me you want to cancel it at any time if you want. So that's my offer.
Sure.
I don't have anything else for you right now, unless you have any other questions.
Well, the only question I had is, when people are subscribers, say they had a stock that you're not following, would they be able to email you and you would be able to give them some research on that, or?
Yes. Many of my subscribers do exactly that.
Mm-hmm.
Like I had a guy today was really interested in, let's see, it's a ETF that mainly includes natural gas.
Mm-hmm. Right.
And I can't remember the ticker right now. FSC, that's it, FSC. So he wanted me to look at FSC. And FSC's really been doing well lately, and so I started covering it. I'm going to start covering it. Is it FSC? No, that's not it. How about FCS? I can't remember the ticker. Sorry.
Mm-hmm.
Anyway, it's been moving up pretty strongly, even though natural gas has been chopping sideways. So I'm going to start putting a wave count on that and showing it in the webinars as a regular thing. And I'm going to send him my analysis my initial analysis as soon as I get done. So he's been with me a long time. Almost all my subscribers have been subscribers for many years.
Good. Well, I, for one, would definitely suggest everyone check it out, because there's a lot of value to what you bring to the table. And obviously, you're going over a lot of price and timing as well. So again, like you were saying, adding it into your toolbox as far as your decision making seems like it would have a lot of value. David, I'm going to send it back to you, and basically, we'll talk to you soon. Sid, thank you very much for being here. I hope we can do it again sometime.
My pleasure. Thank you, Jim. Bye-bye.
All right, thanks, guys. Lots of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network or directory. And you can also go to TimingResearch.com to get access to the recording of this show as soon as I can get it posted, as well as any of the past shows. And I want to thank Sid Norris, as you can see there, ElliottWavePlus.com, for being here today, first-time guest. And also, he will be joining us again next week. We're going to have a special Fibonacci and Elliott Wave event next Wednesday. That I'll be putting more info about that out soon. So, but Sid will be joining us for that again too. So looking forward to that as well. And the Option Professor of OptionProfessor.com. Thank you for moderating again.
Thank you, David.
All right. Thanks, everyone.